The upwards price momentum of Goldman Sachs ended with a pattern called the Harami cross pattern. In this video, we're going to take a look at the pattern, what it looks like, and why it is important and useful in trading. So yeah guys, without further ado, let's get started right away. So the first thing I want to do here is that I want to zoom in a bit and take a look at what is the pattern, what is the meaning of the pattern. So the Harami cross pattern, what is it? Well, it is a 2 candlestick pattern, so a pattern that consists of 2 candles. The pattern can be a bullish or bearish trend reversal depending on where on the chart it appears. And by bullish, we basically mean that the trend is shifting from a downward or bearish trend to a neutral or to a upwards trend. And the opposite is true for a bearish trend reversal. And one thing worth to mention is that many traders consider the Harami cross pattern more significant than the normal or regular Harami pattern. If you want to learn about the regular Harami pattern, I have a video about that and it will be linked in the eye in the corner. But yeah, now let's take a look at how the Harami cross pattern actually looks like. So we can start by taking a look at a bullish Harami cross. And the first thing about the bullish Harami cross is that it needs to appear during a downtrend. So prior to the actual pattern, we would have some candles, for example, look something like this. So a bearish trend here. And the first candle of the pattern should be a strong red real body. And by the way, if you are unfamiliar with any terms I'm using in this video, I have another video about the basic candlestick terminology, and I can link it up in the corner in the eye as well. So if you're feeling like you don't understand the terms here, I recommend watching that one before continuing with this one. But alright, so the first candle should be a strong red one. Looks something like this. It might have some shadows, perhaps looks something like this. And the third thing about this pattern here, and it's actually this that separates the Harami cross from the normal Harami, and that is the second candle is a doji that is contained within the red real body. So a perfect doji would look something like this. It basically just looks like a cross because the opening and the close is at the exact same level. I have a video about the doji candlestick and I will link it up in the corner in the eye. So this is basically what a bullish Harami cross looks like. And remember here that this doesn't mean that we will see a trend reversal to the upside. It can be a start of a upwards movement, but it can also be start of a sideways movement. So a change of trend doesn't mean that it changed from down to up, but it can also mean that it changes from down to sideways. And of course, not all patterns are true. This pattern usually needs confirmation in order for traders to see it as valid. And the opposite of the bullish Harami cross is the bearish Harami cross. And I can just show that one real quick as well. The bearish Harami cross is the opposite, and I can just show real quick. So prior to the actual pattern, we had a upwards trend. The first candle is a strong green one, and the second candle is a doji. So it would look something like this. And this pattern, this is basically it. This is the bearish Harami cross. And now before looking at the chart, I just want to take a look at some more interesting things here. One thing is, it is the opposite of the engulfing pattern. So as you can see, if we would just switch place of these 2 candles, we would have a red one, a red doji, and then a green one that engulfs the prior candle. So this would be a engulfing pattern in that case. Another thing worth to note here is what I kind of touched upon earlier, and that is that it requires confirmation. So if you actually want to trade a pattern, you usually don't enter until you have a confirmation of a trend reversal. But alright guys, so now let's take a look at some charts here. An example. We are where we were in the beginning of the video, and the pattern we are looking at is this one right here. And as you can see, prior to this pattern, we had a upwards movement, and that was a requirement, and that was a requirement for the pattern. The first candle is a strong green one, and the second candle right here is, in my opinion, a doji. So as you can see, it actually has a tiny real body, but it is very rare that we have a perfect doji. Lots of the times we actually have some form of small real body, but we can still consider it a doji and a Harami cross pattern. And as you can see, this pattern here, this is important, this pattern here led to a trend reversal, but the trend went from a upwards trend to more of a sideways movement. So it's important here, what I mentioned earlier, that it doesn't have to mean that the trend reverses to the downside. We got some downwards movement here, but it wasn't very significant. And yeah, I actually think this is it for this video. If you found any help or value out of it, please consider dropping a like. And if you guys want to see more, don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome rest of your day, and I will see you guys in the next video, hopefully. Ciao, ciao!